Welcome to SG Investment. Our channel is dedicated to helping you make informed decisions about your money and to guiding you on your journey towards financial success. Subscribe now and join our community of like-minded individuals on the path to financial freedom. How to think about risk and investing. Risk and investing are closely related, as investing involves taking on some level of risk in exchange for the potential to earn a return. Here are some things to consider when thinking about risk and investing. 1. Risk tolerance. Your risk tolerance is your personal willingness and ability to handle the ups and downs of the market. It's important to understand your own risk tolerance and invest in a way that aligns with your goals and comfort level. 2. Diversification. Diversification is a way to manage risk by spreading your investments across different asset classes and sectors. This can help to reduce the impact of any one investment on your overall portfolio. 3. Time horizon. Your time horizon is the length of time you plan to hold an investment. Generally, the longer your time horizon, the more risk you can afford to take on, as you have more time to weather market fluctuations. 4. Return expectations. It's important to have realistic expectations about the potential returns on your investments. Higher risk investments may offer higher potential returns, but they also come with greater volatility and the possibility of losing some or all of your initial investment. 5. Professional advice. Seeking the advice of a financial advisor or professional can help you better understand your options and make informed decisions about your investments. Investment versus speculation. Investing and speculation are two different approaches to the financial markets. Here are some key differences between the two. 1. Purpose. The primary purpose of investing is to build wealth over the long term through the acquisition of assets that are expected to generate income or appreciate in value. Speculation, on the other hand, is focused on short-term profit and involves taking on a higher level of risk in the hopes of realizing a quick return. 2. Risk. Investing involves taking on some level of risk, but the risks are generally lower and more predictable than those associated with speculation. Speculation involves taking on a higher level of risk in the hopes of achieving a higher return, but also carries the potential for significant losses. 3. Return expectations. Investors typically have a long-term perspective and are willing to accept a lower level of return in exchange for the stability and predictability of their investments. Speculators, on the other hand, are often seeking higher returns in a shorter time frame and are willing to take on greater risk to achieve those returns. 4. Analysis. Investing typically involves careful analysis of the underlying assets, including an assessment of their intrinsic value, future prospects, and the stability of the market in which they operate. Speculation, on the other hand, often relies more on market trends and the perceived likelihood of a particular outcome. Investing versus saving. Saving and investing are both important financial strategies, but they serve different purposes. Here are some key differences between the two. 1. Purpose. The primary purpose of saving is to set aside money for short-term or emergency expenses, such as a car repair or unexpected medical bill. The primary purpose of investing is to build wealth over the long term through the acquisition of assets that are expected to generate income or appreciate in value. 2. Risk. Savings accounts, such as those offered by banks and credit unions, typically involve little or no risk to your principal, as they are insured by the Federal Deposit Insurance Corporation, FDIC, up to certain limits. Investing, on the other hand, involves taking on some level of risk in exchange for the potential to earn a return. The level of risk can vary depending on the type of investment and the market conditions. 3. Return. Savings accounts typically offer lower returns, in the form of interest, compared to investments. The return on investments can vary widely, depending on the type of investment and the market conditions. Higher risk investments may offer the potential for higher returns, but also carry a greater risk of loss. 4. Time horizon. Savings accounts are typically used for short-term financial needs, while investments are typically held for a longer period of time with the goal of building wealth over the long term. Conclusion. In conclusion, risk and investing are closely connected, as investing involves taking on some level of risk in order to potentially earn a return. It is important to consider your risk tolerance, diversification, time horizon, return expectations, and the possibility of seeking professional advice when thinking about risk and investing. It is also important to understand the differences between investing, speculation, and saving, as each serves a different purpose and carries a different level of risk. Investing and saving are both important financial strategies, but they serve different purposes, and it is important to find the right balance between the two based on your personal financial goals and risk tolerance. Thanks for watching. Don't forget to like, comment, and share.